This is a big week. 164 names in the S&P 500 coming out with earnings, another 30 in the NASDAQ, so about a third of all the major stocks having earnings this week. But what we're going to cover on this show, we're going to get you ready for the economic data that's coming out this week, because we have 3 of the top 6 data points coming out this week, starting on Wednesday, when we get the first look at second quarter GDP. You know why that's important? Because we're going to look at a big jump from last quarter's GDP. And GDP expected to go from down 0.5 to 2.5%. So watch for that, a big jump in GDP. Remember, it was a tariff-related surge in imports that made that go down. Watch for a big jump in GDP. Personal consumption expenditures, part of the GDP data point, expected to go from up 0.5 to up 1.3%. So 2.5%, 1.3%. There's your GDP numbers. Then Thursday, personal income and outlays, right? The inflation look that we'll get off the PCE number is vital to the inflation and how we're reading inflation. Remember, core PCE is what the Fed looks at. So personal income expected to be up 0.3. Personal consumption expenditures up 0.4. PCE up 0.3 month over month on headline, 2.5% year over year. Now that's 0.2 higher than last month, something to be watchful of. Core PCE up 0.3 and unchanged at 2.7%. So firm to higher on the year over year numbers. Now let's get to the money ball of the week, and that is non-farm payrolls and employment. Non-farm payrolls expected to be up 102,000, with unemployment ticking from 4.1 to 4.2. Wages expected to go from 0.2 to 0.3 and to stay steady year over year at 3.7%. So, to recap, much stronger GDP off of last quarter's anomaly, let's face it, off of imports. But then inflation coming out in PCE and core PCE, and wages and unemployment. These are the data points that are going to move the Fed. They're going to move expectations of rate cuts. So watch for that.